Most investors are fighting over the same 3 cities. They're chasing the same overpriced condos and fighting for tiny margins. But while the crowd is distracted, the real wealth is being built silently in places you've probably never considered. We've spent the last 6 months analyzing migration patterns, job growth data, and capital flow for 2026. We aren't looking at where people were. We're looking at where the money is moving right now. In this video, we're unlocking the top 5 hidden gem markets for 2026. These are the regions with high rental demand, low entry costs, and massive appreciation potential. By the end of this video, you'll have a concrete roadmap to diversify your portfolio and start generating passive income without the big city headache. Let's dive in. You're probably like most real estate investors, stuck in a crowded market. Everyone's fighting over the same 3 cities. But is that really where the best returns are? Probably not. The competition is fierce, prices are high, and yields are low. You're not just competing with other investors, you're also up against giant institutional buyers. They have deep pockets and can afford to wait out the market. You, on the other hand, need cash flow to survive. The big cities are also becoming increasingly regulated, making it harder to find good deals. Zoning laws, rent control, and permitting issues can kill a potential investment. And let's not forget the prices. You need a significant amount of capital just to get in the game. But what if you could find markets with less competition, lower prices, and higher yields? Markets that are poised for growth, but haven't been overrun by institutional buyers yet. That's what we're going to explore today. Stop chasing the hype. New York, LA, Miami. They're saturated. The cap rates are crushed, and the entry price is a mountain. To build real wealth in 2026, you have to stop looking where everyone else is looking. You need the migration shift. We're looking for high growth, low competition zones. Here are the 5 hidden gems. First, the tech satellite hubs. Forget the Silicon Valleys. Look for the cities 2 hours outside the major tech hubs. These are the places where young professionals move to escape the rent, but keep the salary. You get high-quality tenants and significantly lower entry prices. Second, the logistics corridors. Follow the trucks. Look for towns situated at major interstate junctions. E-commerce isn't slowing down, it's expanding. When a giant distribution center moves in, thousands of workers follow. Residential demand spikes overnight. This is where you find the most stable cash flow. Third, the silver tsunami retreats. Baby boomers are retiring in record numbers. But they aren't all going to Florida. Look for healthcare hubs, smaller towns with world-class clinics and low property taxes. This demographic has the most equity and the most stability. Low vacancy, low drama. Fourth, the remote havens 2.0. We aren't talking about tourist traps. We're talking about towns with high-speed fiber optic internet and a high quality of life. These Zoom towns are transitioning from vacation spots to permanent residences. The rental demand for long-term executive leases is exploding here. Fifth, the energy transition zones. Look for the battery belt. Government subsidies are pouring billions into green energy and semiconductor plants in the Midwest and South. New industry means new jobs. New jobs mean a desperate need for housing. Get in before the developers drive the prices up. Now you have 2 ways to play this. Option 1, buy the dirt. If you want physical assets, you need to automate. Don't become a landlord, become an owner. Use professional property management software to handle the leases and maintenance. This is the only way to keep it truly passive. Option 2, the hands-off approach. Use rates. REITs allow you to invest in these emerging markets without ever picking up a hammer or dealing with a tenant. You get the dividends, you get the growth, and you keep your weekends. The window for these markets is closing. The question is, will you be the one buying in or the one wishing you had? Now look, you might not have $100,000 for a down payment today. That's where REITs come in. They let you own a piece of massive portfolios without the landlord stress. Pure passive income. But if you're going the physical route in these hidden gems, do not manage them on a spreadsheet. Use the property management software I've linked in the description. It automates your rent collection and tenant screening. It turns a full-time job into a few hours a month. The data is clear. These 5 markets are primed for a breakout by 2026. Those who move now capture the appreciation. Those who wait pay the premium. Check the links below to get started with Agitation or the software. Hit subscribe to keep your portfolio ahead of the curve. Let's build that wealth.